Hello everyone, thank you for registering to this webinar. We are waiting a little bit that a bit more people are joining and we will start in a few seconds. From what you understood, we will present you today the key points that are in the Netherlands Bank Guide to Managing Climate and Nature Risk. I'm with my colleague Heidi. Today, you will be able to ask questions in the chat. My colleague Ruby will answer them during the webinar, and pay attention because there is already a question for you in the chat that you can answer right now. So I'm going to introduce the two people that are here today for you. So my name is Maxence Bouton. I'm an ESG consultant for Iceberg Data Lab. And today I am supervising the Netherlands markets for financial institutions, banks, asset management, funds, pension funds, all the financial institutions in the Netherlands. So you will be able to have a chat with me in the future if you want to know more about Iceberg Data Lab. And I am with Heidi, regulatory specialist at Iceberg Data Lab. She's specialist in TNFD, TCFD, SFDR, CSRD. And today, of course, we will talk about the DNB frameworks. So, first of all, I'm gonna explain briefly what Iceberg Data Lab do. So we are ESG data provider specialized on the environmental part of the E of ESG. We have more than 6 years of expertise, mainly in nature, biodiversity. That's where we started, but today we also provide climate data. Our specialty is to cover scope 1, 2, and 3, upstream and downstream at issuer level. So not only at sectoral level, we go much more further and we have granular data. This is how we differentiate from our ESG competitors. And we are today able to assess the impact on climate and nature of more than 2,300 commodities, products, and services. And this is what makes us one of the most granular ESG data provider on the market. And we cover more than 9,000 listed issuers with a strong scientific approach. This is our motto, to be as granular as possible and to make sure that the pressures we evaluate are as close as possible from the reality. The broader overview of what we can do today. So we have regulatory solutions and also climate and nature solutions. Of course, if you want to discover more about what we offer at Iceberg Data Lab, you will be able to have a chat with me in the future if you want. This is a broader overview of clients that we have. So asset manager, banks, pension fund, private equity, universities, index providers. Most of our clients are in France, but we also have clients in the Netherlands, such as Achmea or Iceberg. We are a European ESG data provider, something that is very important to mention. So yeah, we will, of course, have a pleasure to work with European financial institutions for that reasons. So let's deep dive into this guide. Heidi, could you please explain us what is this guide and what is 2025 updates? What are they compared to 2023? Could you please tell us more
Bluetooth
about it?
disconnected.
So hi everybody, I hope you can hear me well. If not, just drop a comment and then we can just get back to you soon. So thank you for joining. So just to set a little bit of what is the DNB guide. The guide is called Managing Climate and Nature Risks, Nature-Related Risks. It's a supervisory framework.
Bluetooth connected.
On how financial institutions, such as insurers or pension funds, should manage climate and nature-related risks. The main aim of this guide is to contribute to the appropriate management of climate and nature risks, and as well as the DNB, the Dutch Central Bank, has focused on providing sectoral good practices in two main focus areas, which they have identified, as we can see, is business model and strategy, followed by governance, risk management, and information provision. It is understood as good practices as the approach to fulfilling regulatory obligations, which arise from laws and regulations. In the Netherlands and in the EU. It was originally published in 2023, and it got recently, as it was just mentioned, updated in the past September 2025. I think it's important to mention that it was framed as guidance, which is supervisory expectations, which is meant to help institutions to prepare voluntarily. However, recently in 2025, these have evolved into supervisory standards, which, even if it explicitly states that it assess institutions' implementation, which, even if it's not a binding regulation, it is set as a supervisory reference framework, which expects institutions to demonstrate progress against these principles. As a key change in 2025 is that this guide becomes more operational. I will guide you a little bit further on what are the key changes that they in 2025 shows, but one of the key things to highlight is that it links qualitative expectations to quantitative expectations, meaning that it makes them measurable and auditable. And as well, this new version also replaces the previous version, and it has been expanded according to the legislative and regulatory developments at the Netherlands and the EU.
And how does this guide fit into the broader European regulatory landscape?
So yeah, this is key because it is important that as the Netherlands being part of the EU, it also plays a key role. In considering the current regulatory climate, the growing number of sustainability-related laws and regulations, these continue to impact financial institutions. And considering the growing non-prudential legislation and climate and nature-related, for example, in 2018, at the EU level, the European Commission drew an action plan for finance sustainable growth, where it makes sustainability an integral part of risk management to encourage transparency and to consider it into the long-term thinking. And the DNB framework closely aligns to these EU sustainability finance institution architecture, such as the CSRD or SFDR. Yet, while the EU rules focus more on disclosure, the DNB guide focuses on risk management integration, meaning that this risk should be entered into the business strategy, governance, and capital allocation, which thus also sets the DNB as a frontrunner in operationalizing nature-related risks, particularly because it only bridges into EU rules, but also bridges into initiatives such as TNFD and TCFD, which also can help with the data architecture to cover both supervisory and disclosure needs.
And what are institutions now expected to do differently under this guide?
Yeah, so to dive now, it's time to dive deeper into what the updated guide is. While the 2023 edition focused primarily on climate transition and physical risks across sectors. This updated guide expanded scope in nature-related risks and also addressing like biodiversity loss, ecosystem dependencies, or pollution impacts. This new guide contains new good practices and includes how to manage nature-related risks and climate ambitions as related to commitment expressed by institutions. I think it's important to state that the whole guide focused on the governance and how they can set a clear risk appetite for environmental risks, and this is how it links to integrate into topics into strategic decision making. I think it is highlighted how to ensure board members are trained and capable into understanding this kind of environmental dependencies. The DNB also expects top-down integration, meaning that institutions should translate climate and nature risks into quantifiable strategic targets. For example, just to mention that the inclusion of setting a portfolio level decarbonization or biodiversity targets. But I mean, one of the key expectations that it has kept, but also being adapted is the materiality of climate environmental risks for their business, but which has been also with the inclusion of biodiversity risks, as well as keeping the conduct scenario analysis and stress testing. There's stronger emphasis on governance accountability and how the inclusion of to monitor risks through KPIs, such as that not only fulfill for internal like carbon footprints or level portfolio level, but also the integration as taxonomy level exposure, and how as well developed governance structures that enhance confidence and sustainability related metrics, and finally like how to ensure data quality traceability into their reporting, and how does these align in this other macro level regulatory landscape. Just to dive deeper in how the focus areas that the guide has said is just to start with the business model and strategy. The key expectation is how institutions should integrate climate and nature related risks and how this related to business models and transition planning. And the key expectation is to identify how institutions should identify, assess, and monitor such exposures. And as good practice, the one example it would be how an institution links their strategy and capital allocation to quantified environmental targets. To follow with the second focus area, that is governance. One of the key expectations is the creation of a clear board accountability, meaning that sustainability is part of the mandates and oversight. And it is expected evidence of expertise, training, and internal ownership. Good practices of it should be training and the management body on nature dependencies, or establishing a board level sustainability committee. Moving on with the third risk management, that is risk management. One of the supervisory expectations is to the embedment of environmental risks into existing frameworks, and the stress of the use of double materiality approach, which means the inclusion of financial and environmental relevance, and this should be translated as a good practice, like the approach to fulfill it will be maturation results into non-pricing underwriting, but also taking into incorporating biodiversity footprint and dependency mapping. And finally, for the fourth focus area, it would be the information provision and reporting, which this is key because it should ensure consistent, traceable, and verifiable disclosures, which at the same time should align with other frameworks such as the CSRD or initiatives as TNFD. The institution should provide transparent, consistent, and verifiable disclosures. Such a good practice is publishing the methodology transparency for regulators or stakeholders, and integrate dashboards that link disclosure data to risk management of the documents.
And what metric this guide is based from financial institution to back up this sustainability disclosure?
So yeah, this is key because the guide, overall, makes a strong emphasis on the data quality and the documentation of it. So it's important that overall, across the 4 focus areas, it should be documented the origin of the data, the confidence level, and the data, like how does it feed the risk models or scenarios. So reporting any part of the methodology. So we understand that to build such data infrastructure, it comes with some data challenges, starting with quantifying, standardizing, integrating, and the computation stage. And as you can see, some KPIs that they fulfill, that enable the fulfillment of the good practices would be, for example, for business model would be the carbon footprint or biodiversity footprint. For governance would be the percentage of board management training on climate and nature related risks, or FTEs dedicated to climate and nature risks. As well, for example, for risk management, a good would be the percentage of counterparties disclosed in scope 1, 2, or 3 GHG emissions, or the percentage of assets located in high risk climate zones, which should be like with the risk of flood, drought, wildfire, and finally for the disclosure would be the percentage of PEI indicators coverage, the data quality of it. And we understand that to build such data infrastructure, it does come with data challenges, and some of data points should include like scope 3 emissions, which we understand as financial institutions especially would be having a difficulty to calculate that for the lending portfolios, as well as biodiversity footprint, which quantifying the impact and dependency across complex value chains. Sometimes the data availability is not as rich, or for example, land use, water stress, or pollution metrics. With that being said, so it is important that the coverage of data is rich, and that's what like we do here at Iceberg Data Lab.
Okay, so thank you, Heide, for this this explanation, and more specifically on the case of Iceberg Data Lab indicators. Could you help us understand which indicators can help financial institutions meet those recommendations?
Yes, of course. So, I think it's important to state that here at Iceberg Data Lab, we provide a quantification layer that turns qualitative commitments into measurable indicators. For instance, on our climate footprint models, where we could provide a company and portfolio level and using life cycle analysis. For example, in this case, on the slide, you can see how it is asked for portfolio carbon footprint, and what we can create, what we have contributed with different clients is like the quantification at portfolio level of scope 1, scope 2, or scope 3. And that how also we can do a benchmarking across peers or the similar asset class. As well, for example, we see a different example that also can fulfill like the focus area of business model and strategy would be the biodiversity footprint, as it states in the DFB guide. It is important to quantify and we can provide it by land use, pollution, air pollution, water pollution, the biodiversity footprint according to the assets included in the portfolio. We have also all the different products such as the dependency score that, as you can see in your screen, it also provides this map on the score of per economic sector according to the reliance on biodiversity. And this could be a portfolio or company level. Another example would be heat maps that we're going to see in the following slide. That, in this case, would be targeting the risk management focus area, which is with our climate physical and transitional risk, we can create heat maps. And then it will be according to the economic activity and the sector that the assets lie in. And as well, it can also, these kind of maps can also be related to, as you can see in the following slide, for the dependency score as well. So we will be able to provide all this that you can definitely translate into risks, into the risk management strategy.
Okay. And what can financial institution expect in the next coming years? And how can the institution based in the Netherlands can start going forward to meet those recommendations?
Yeah, so it is important to state that the guide does not set a strict statutory deadline like a regulation would, but it strongly anchors expectations to the current EU and supervisory timelines, which means that Dutch institutions, by publishing the previous guide in 2023, are expected to have acted by now and show tangible progress in the next coming years. Where, like, if we were to set a roadmap or a timeline where institutions are expected, are like short, medium, and long term, it can be divided. So for immediate, it will be the integration of readiness, that it is a current phase where by the end of 2025, institutions must have already set a foundation for the process to set in place time by this update that has just been released. And then from now until by the end of 2026, we will call an operationalization and demonstration phase where the institutions should be able to demonstrate how environmental risks are embedded into the day-to-day operations and how the risk management frameworks relate to. By the second phase will be medium term, that is a medium term, that it will be from 2027 to 2028. That is the full embedding and disclosure alignment phase, where by this stage, environmental risk management should be fully embedded and institution strategic planning and other disclosure frameworks should have been set in place. And it is expected that a continuous change from 2029 onward, that is the dynamic supervision and data quality, where institutions should move into a continuous improvement cycle and updated scenarios, as well as governance regularly, and that also can be in line with the regulatory climate at EU level.
Thank you very much, Aide. I think it's much more clearer now for people who attended these meetings to see how everything has changed and how the DNB is now recommending and advising financial institutions to better assess climate and biodiversity risk. If you want to know more about Iceberg Data Lab, our methodology, indicators, coverage, everything that would be interested for you to see how it can help you to support you and meet those recommendations. I'm inviting you to contact us or contact me directly to see that much more in details. Thank you for your attention and wishing you a very good day. Thank you, Aide.
Thank you.
Bye.